Hi, this is Kerry Artek with Wicked Stocks, bringing you an update. It is an update. We used to do the iShares 20-year Treasury Bond ETF, that is the TLT, on a week-by-week basis. We stopped doing that some months ago, but I've been posting periodic updates. I posted an update prior to the buy signal that you see on this chart here. This is a weekly bar chart in the TLT, and on the week of July 29th, we posted a meaningful buy signal that by closing above it, at that time was almost a 2-year channel top. The base of this goes back to October of 22. So it is an almost 2-year structure. We closed above it in late July. That set off a long-term buy signal. In other words, because this is a treasury sort of, I don't want to call it a treasury instrument, but it does represent the longer-term treasury bonds. As the price of a treasury bond goes up, the interest rates that are correlated go down. So we've been seeing, a steady decline in rates. Really, I could go back to the April low earlier this year. We've been seeing rates steadily decline since then, and in fact, that was indicated as a continuation thereof following the settlement in late July above this 95.09 descending almost 2-year channel top that at the time indicated a much more significant 4-year descending channel top that this week is at 104.56. Now, I don't expect to see that formation this week, but it is dropping 34 cents a week, and you can do the simple math over time just in case we don't update you as this is being tested. We are expecting the 104.56 4-year channel top to be tested in the coming weeks, and if tested, can absorb buying, I'm going to say, well into, if not through, 2025, through the rest of this year and well into 25. In short, what I see on this chart is what I would call a counter trend rally. We've got what you would say near-term weakness in interest rates or strength in the TLT, a near-term trend in declining interest rates that still exists within the confines of a longer-term higher interest rate environment. So there is still this sort of upside risk, if you will, to interest rates moving forward through 2025, so long as we continue trading below 104.56. Now, if we do close above the 104.56 formation in the coming weeks, that would be a significant long-term buy signal, and we would have much higher targets that I would expect to play out well into 25. And the irony here is, while it, yes, would be a continued lower interest rate environment that would continue to play out in 2025, I think it also carries with it the very real risk of a recessionary environment. And so a settlement above 104.56 may unfortunately indicate, or at least, indicate the higher risk of an impending recession. Now, I don't want to read too deeply into that. It may not involve a recession, of course. It may just involve lower and lower rates that, say, the 30-year mortgage rate may drop into the 4 percentiles from their present roughly 6 percentiles. So there's that. But anyway, kind of a cut to the chase here. Having settled late July above the 95.09 descending channel top, we are still expecting as a 2 to 3 month target, and we're a solid 2 months into that right now, the 104.56 4-year descending channel top, where the TLT can top out through 25, which means interest rates can resume their upward trend as we continue into 25. And if we can close above 104.56, that channel top in the coming weeks, that just indicates more of the same, a continued lower rate environment that may also involve a recession for 25. Who knows? We will see. I'm going to finish with that in the weeks ahead, we close back below 95.09. That is a no-brainer for a higher interest rate environment as we continue through the rest of the year and into early 25. I think that pretty much wraps it up. I'm going to leave it at that for this particular Wicked Stocks video analysis on the iShares 20-year Treasury Bond ETF, that is the TLT. You have a great day.